Hey everyone, welcome back to another episode of AWM Insights. Justin Dyer here, Chief Investment Officer at AWM Capital, joined by Mena, Hanna, Portfolio Manager here at AWM Capital. We're going to talk today about playing the long game, how elite athletes and investors win through process, not hype. Love that title. So we set up a somewhat of a series on making good decisions last week. We're going to carry on with that through the next few episodes and really start to take that into everyday real life applications. Today, we're going to go through a general scenario, a frequent scenario that we get pretty often where quite often we get a question around, hey, should we be invested in, XYZ? XYZ is not an actual asset or an investment, but, insert the asset of the moment, gold or Bitcoin or some sort of meme stock or something like that. Anything that just generally gets attention through socials or in the financial news, etc. That is often brought up in conversations with clients. Not a bad thing, totally makes sense. It's front and center, it's in your eyes. You should be asking about it. Where we're going to go through how we apply this framework in answering that question more or less and answering a lot of questions when it comes to, new things that are capturing your attention. Maybe it's a new exercise regimen or something like that, right? These things in this day and age come up all the time. Should I be doing X, Y, Z? And this decision framework that we've set up, it's not unique to AWM. It is very much a kind of tried and true. I think I mentioned this. You could actually go get a PhD in this type of stuff. And so there's a lot of study and research that goes into making good decisions that you can apply into all sorts of your life. And so today we're going to get into this, how we should think about, investing fad of the moment. And let's just jump into the framework, Mena. So how do we try to answer these questions that often come up?
Yeah, and this might be a little bit of a boring answer, but you have to really understand what you're going for, like clarifying your goals, establishing where your guideposts are and where you're trying to get to is step number one. Like to think about this, and we were talking about this. If you're playing football, like where is that first down marker? And based on that, and based on, the number of downs you have left, you can identify and determine what kind of play that you want to call to actually get yourself there. So I really think that is step one in actually thinking through how to make a good decision and structuring your decisions in an effective way. Decision making is all relative. Like it's going to be unique for every person, for every scenario, every stage of life. So really capturing all of this information, and even with the concept of I want to win this game, I want to make the best outcome of where I'm at situationally, breaking it down into the most minute and call it a unit-based decision or decision-based framework is the best way of actually evaluating how to go through it. If it's, 3rd and 1, you're the Philadelphia Eagles, you're running the tush push, that's what gets you the first down. You can think whatever you want about it. That is the most effective way of doing that. Yeah, it works. Now, if it's 3rd and 15, you're going to make probably a different decision. So identifying, I guess, where you're at is 100% step number one.
Yeah, that's great. That's great. I mean, there's so many. As you were talking, I just did a quick little search of quotes along this topic, and they're endless, and it's amazing. I shouldn't say amazing. That's a little bit cynical of me, and I'm kind of going off script here in a sense. But it's human nature to get caught up in whatever distractions that really take you down kind of a path you shouldn't get. But there's just, like I said, so many quotes here. Joe Madden, if you focus on the process and not the outcome, you'll have better results, right? Like you can just keep repeating these. Stephen Covey, concentrate on what will produce results rather than on the results, the process rather than the prize. I mean, endless great quotes along these lines where you need to have that process. But to your point, you need to set the goals up ahead of time. Otherwise, you don't even know what process to build or structure
100%.
in order to frame what an outcome is.
Yeah. And really talking about outcomes, like flashy outcomes are what we hear about day in and day out. Gold is a perfect example of that. Gold has done exceptionally well this year. It's up 50%. Now today it's down 5.5%. So maybe a little bit of a pullback and come back to earth moment for gold. But that is an outcome that if you actually look at the historical data, your process, a strong process would tell you not to invest in gold. And you would have been better off probably not investing in gold for 39 out of 40 years in the past, 4 decades. But you're only going to hear about this 1 year where gold outperforms the market substantially and, makes investors back some of the money that it should have made them over the past 40 years.
Right. And so trying to put this to some concrete points, we really think about things in probabilities, right? So clarify your goals. Okay, then how do we best support those goals with the highest probable investments? We've talked about gold recently, not a terrible asset, let's call it. I was going to say investment, but I'm cautious in using that word because it doesn't have these things called cash flows that allow us to value it with any meaningful confidence. It doesn't mean it doesn't go up or down or appreciate over time or retain its value. We're setting all that stuff aside. From our perspective, we want to then bolster your goals as best as we can. And in our opinion, the best way to do that is to start to build a portfolio or have a portfolio with assets or investments that we can value with strong probability, or also go back to the history of data and have a confident approach or expectation of certain returns going forward. So we know, hey, in order to choose your allocation of wealth, in order to fund that, maybe it's multi-generational, maybe it's a second, third, fourth home, maybe it's a huge charitable bequest. We want to make sure that is then matched with an asset or investment that gives you, listeners, the highest confidence in meeting that. Like that is how we then distill this framework. Using this gold example, we just don't have that confidence. Doesn't mean it won't go up in value, doesn't mean it won't go down in value, just doesn't support or fit into our decision framework.
100%, yeah. And really taking that framework and applying it, again, like I'm going to be repetitive here. If you only need a yard, you can run the tush push. If you have a wedding, kind of applying this to our clients' lives, if you have a wedding in the next 6 to 12 months, probably not going to gamble that money. You're probably not going to throw the deep ball. You're essentially, that is a 3rd and 1 moment. You don't want to get to 4th down potentially with your wife and have to remove some people from the invite list, but you're probably not going to take a shot downfield either in a good asset class like venture capital, which is successful over time, or in an asset class that might be less favorable in gold. Like that part doesn't matter. What you're trying to do is accomplish your goal. And at the end of the day, the asset still matters. Like I want Saquon running the ball. I don't want to, hand the ball off to myself potentially and do it myself. You need a quality investment, quality player in the position to execute and give you that probability, but it has to be in the right structuring, in the right framework, and with the right implementation.
Yeah, 100%. I mean, quality is a great just term to use here, where we've all heard stories of people getting lucky and, you only needed 1 yard, but you scored a touchdown, or what, pick your analogy. A great one that I love is the founder of FedEx. I think he had he's basically bankrupt. He needed to go to Vegas. He went to Vegas and gambled whatever he had left in his life savings in order to make payroll. And now FedEx is the company it is today. That is not good quality decision making. It works in these edge cases, but we as AWM, as stewards of your capital, do not make decisions in that manner. That's reckless. That is not what we're trying to do. And so quality being a hugely important term and word for us, right? We're in the job of keeping our clients wealthy, not necessarily just putting it all on black, right? And often when we're talking about the psychological aspect of chasing, again, gold, kind of asset of the day, right? There is this incredibly risky behavior and behavior at play here.
Yeah, and kind of piggybacking off of that example, if you actually follow the game plan, you're never going to have to go to the casino and gamble your life savings to stay afloat. Like, ideally, you never get to that 4th and 50 situation where you need a miracle to happen to save you. If you're following a game plan, like you're moving the ball consistently down the field, you're scoring points, you're winning games because the strategy makes sense, the investments that you use are high quality, and the odds are in your favor to succeed. So even taking a whole step back, like if you do this right, you'll never have to kind of worry or be afraid or have to gamble to force a good outcome.
Yeah, totally. I mean, at the end of the day, we can kind of distill this conversation down, which hopefully there weren't too many analogies, but I think they were great analogies, if I do say so myself. But good decisions really are relative. If we can apply a consistent, disciplined approach with high quality decisions embedded in it, that's going to compound over time, right? To your point, Mena, run the playbook of high quality decisions, and that's going to compound over time, both in your portfolio and in life. Again, we talk a lot about the mental game, right? 1% better, little changes compound over time and get you to win games, but most importantly, win that championship. And the championship, when it comes to investing, is making sure you can accomplish your goals. So we're going to wrap there. Hopefully this was helpful. We're going to continue to riff on this general concept of making good decisions, making quality decisions when it comes to investing. We'll get a little bit more granular in the episodes upcoming, talk about actual asset classes and even how we apply to a specific asset class and manager selection in some cases. But until then, own your wealth, make an impact, and always be a pro. Thanks for listening.